Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, May the 12th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters, I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Manufacturing PMIs coming out across the pond, not so much here in the United States because we just got out our Institute for Supply Management PMI yesterday. I talked about that, but now we're starting to get some of the over the seas PMI numbers. Now keep in mind, their PMI, flash PMI for that matter, is the one that is most widely looked at. So right now we're just getting some of the ancillary PMI manufacturing numbers, but Spain, France, Germany all came right in line with expectations. I'm not going to really run over those because they're not really widely looked at. But the Great Britain manufacturing PMI came in better than expected at 57.3, expected to be 54.0. And we also got, here in the United States throughout the day, we're getting the total vehicle sales. So those numbers are just released periodically, so you just kind of have to keep an eye on those as they are released throughout the day. On to the overall markets, though. We've got crude oil continuing to slide right now, down just over 50 cents for the most part, and approaching this Fibonacci level of the 38.2 fib level. I'm looking for it to go down to that 50 level. I've been eyeballing that for quite a while. Thought it might be out of the cards, but the market really hasn't seen a whole lot of support on this slide since we started talking about that a couple of weeks ago. So crude oil again down on the day. It's not really dragging down the broader equity markets, which is what we generally would see, but some of the other markets are starting to show that there could be a kink in the armor for the equities, with gold kind of pushing a little bit higher, finding support right here at the point of control where the most volume's been spent, and this 50-day moving average touching on that. That's going to act as support as well. Remember, we are still in a somewhat bullish trend here with the 50-day over the top of the 200-day. That's usually an indication that the market is going to consistently move higher. One could even look at it. We have higher highs and higher lows for that matter. So as you can see, a higher high coming up, and we have higher lows through here with the new high here. As long as it doesn't break below this low here, we should be looking all right, as if you are a gold bug for that matter. I have on bearish trades in gold, so I would like to see it pull back a little bit more, but that 50-day is going to act as support. Then with the bonds, they're up 19 points on the day. The market is going to want to trend sideways here with the Fed's moves kind of predicted and already priced into the overall market. One caveat to that is Fed fund futures are starting to show less of a probability of the rate hikes that we've been talking about, it being at somewhere between 1.25 and 1.50 for the Fed funds rate by the end of the year. That's starting to come out just a little bit. I predicted it would be 1.25 by the end of the year. Might be closer to 1% now, as we're starting to see some of these economic data points come out, as we spoke about yesterday. Dow Jones Industrial Average is up on the day as well. This is what I'm talking about. Bonds are up. Gold's doing well. Crude oil not so much, but you'd think crude oil would be pulling down the broader markets. It's not. It's really, we're starting to see a bit of a disconnect there happening in the last couple of weeks. But the Dow Jones Industrial Average up 25 points on the day. Really kind of trying to stay away from this 9-day. If the market's above that 9-day, that shows a short-term bullish trend in a sense, and nowhere even near any of the other two levels. Again, sounding like a broken record. Historical new highs in the NASDAQ at 56.41. being the all-time high, 5641.75. Broader markets just pushing higher. NASDAQ only up 5 points on the day. When we get into the E-mini S&Ps, we're going to look and see this trending sideways is just no fun to really trade. It's going to be a situation where you're starting to put on call spreads, long call spreads, long put spreads, maybe even a couple of long straddles. I don't know that I'm going to necessarily do that. That's a lot of money to outlay on a big move happening relatively soon, and I don't know that I really am seeing that right now. This is what I'm talking about with the E-mini S&Ps. As you can see, just stuck in the mud, cruising sideways. Not quite an inside day, as we see that the value area low is slightly outside of it, but overnight trend really tight. Like if you are an overnight trader, you're probably pulling your hair out and trying to drink espresso as fast as you could to stay awake in that kind of market. The E-mini S&P is just slightly moving into negative territory right now, but all intents and purposes, it is unchanged on the day. Then on to a couple of things that I've done today, or the one major thing that I did today was an FXE, covered this trade. If you remember, I was playing in this trade when the market was getting this really high implied volatility percent. It was actually at 100% at one point. I think I got in just slightly below that 100% ID ranking, and we've gotten this volatility crush, decided to get out of it, trending sideways here, and was not super close to my short calls, but it was close enough that I just decided, got this volatility crush, got 50% of my max profit, which is the target I look for these type of trades. So I decided to pull the ripcord and get out of this one. And I had it in the May, and I was short the 99 puts and the 107 calls to create that strangle. Originally sold it for 77 cents and was able to buy it back for 33 cents today. So slightly better than that 50% of max profit really came in today, but this volatility crush happening really helped that trade out, despite that it came kind of close to these 107 calls that I was short. It's not super close, but those were actually starting to increase in value a little bit, but the put side really helped me out on that and was able to get to my 50% of max profit on that rather quickly. The other thing that I have kept on and really kind of keeping an eye on it now, ConocoPhillips wasn't doing very well this going into today's trade as we were trading right here at this area, and I had on a long put spread in there and was long the 50 puts in May and short the 41 puts to create that spread. It's come off quite nicely. It was looking a little bit better today when we were at the lows. Thought after we had broken through this 200-day moving average, that was going to really give the momentum to the downside. They also lost money, missed on earnings. They were supposed to have positive earnings, came out negative earnings. I've talked about this a lot with the fracking. Anytime the oil is coming down below that $50, even $60 a barrel area, these guys that are really involved in fracking just are right there at a break even. They're really just trying to keep those operations moving because it costs so much to shut it down and then start it back up. It actually costs more money to do that than kind of work at a break even type of margin, which is what they've been doing. But as oil kind of continues to go down, it's not going to look good for companies like ConocoPhillips. So they missed on earnings. I think that they're going to continue to move down, but was keeping an eye on that. Usually don't ride these spreads out through the earnings cycle. My idea with this, because I'm long a put spread, was expecting to see volatility increase quite a bit going into that binary event. It really just didn't happen. As you can see, it's pretty low historical volatility, so I decided to leave that on and roll the dice with it because it didn't get what I wanted. Plus, with oil coming back off, I thought that and staying below that $60 a barrel area, that these guys are going to start to look like they're getting hurt. Came really close to covering this gap. That was another target I was looking for that, hopefully cover that gap, continue on, and at least test this point of control. That hasn't happened yet, but I'm going to hold on to this trade for a little bit longer and see if I can get some more directionality out of this trade. So rode that in through earnings. Meant to talk about that yesterday. It was kind of iffy whether or not I was going to roll the dice on that one. I just decided to do that yesterday, late day, game time situation there. So I'm going to kind of roll that one out. Just wanted to keep you guys apprised of that situation there. I haven't done anything else really today. It's pretty boring. Like I'm saying, I'm looking for some kind of move to give me a little bit of an indication of market directionality, but when it's just moving sideways, we're just not getting that kind of confirmation on anything. So hopefully we can get ConocoPhillips to move down and settle below that 200-day moving average today, and it will look like the bears are in full control of this market. So keep your eye out for that. Friday's webinar, we're going to be talking about how to defend earnings trades when they go against us. It's going to be kind of applied towards just about any type of strategy in a sense, even if it wasn't around a binary event, when we're tested on these strategies that aren't working for us, how we can be mechanical and increase our probabilities of profit. So go to protraderstrategies.com, sign up for that. Hope to see you guys all there. And if you can't take that, take it easy.